important issue in today's world. And he is a mentor to many, right? So welcome, Damion. It's a pleasure to have you with us today.
Anton, it's great to be here. Thanks for having me, my friend.
Yeah, it's absolutely great to have you on. I unfortunately had to miss it at the real estate guys summit in Belize, but you just came back from there. And there were some heavy hitters, including the chief economist of Fannie, who was also giving his view of the world there. So maybe you can just to do a quick high-level overview what his view is and what your view is, what you share with him, and where you possibly will disagree with him.
I'd love to. I think one of the smart things to do is to pay attention to the person that's driving the thinking around Fannie Mae, and Fannie Mae is the 800-pound gorilla in residential housing. So really thinking about what they're thinking about is very important because they're going to drive policy and in large part have an influence on the market. We had a lot of conversations around the inflation that's going on, housing, the problem with supply, the demand, prices moving up from apartments to houses, and what's going on. And the consensus and really what we understood was that after the great financial crisis in 2008, there was a lot of the supply chain that disappeared. About 75% of the supply chain, in fact, left the market. When that happened, it meant that their housing wasn't being built like it would be normally. That's why we have 4 million missing units right now. So there's a gap in the market. It's not just that there's a ton more demand, there's just a missing supply chunk. And the interesting thing is you can't just add in 75% of the supply chain. It takes years to do that. It might take the next decade. So that's going to put upward pressure on housing prices, houses, apartments. We still have the demand. So what's likely to happen is we're looking at more of a renters nation where people are building now for renters. We see this as a growing theme in America, pretty much the consensus from people like Doug Duncan, the chief economist of Fannie Mae, George Gammon, Russell Gray, Robert Helms, these thought leaders, Kenny McElroy, who many know is a pretty big player in the multifamily and other commercial spaces. And we just realized there's an opportunity. So as much as there's likely to be a correction at some point in the coming years, the truth is people have to live somewhere. And we just may see, like in Europe, where you have more and more people spending more and more of their income on housing. That's more likely than a major correction in housing. We're more likely to see a correction in the paper markets and especially the bond markets. But right now, the shift is how many assets can you really build up? And people are looking at debt as a liability or as an asset, and the asset as a liability now because of what's going on with inflation. So it was a really fascinating conversation. We dug into what we expect to happen, and pretty interesting that it was mostly a consensus. There wasn't much in the way of people thinking that housing was going to collapse because there's so much pressure.
Yeah, I think we certainly have seen it, right? Also from institutional players where they reallocate their commercial real estate portfolio to in the direction of more multifamily housing. So I think everyone recognizes we have not just a massive liquidity in the market, but we also have what you mentioned, that supply shortage that we have never really picked up from since the financial crisis more than 10 years ago. And obviously now we still see the result of it. So it's definitely no question that housing will be in a massive demand. Renter housing will be in a massive demand going forward. Having said that, it all markets and local differences obviously always matter, right? So some markets, they grow very strongly and others are still weak, right? But we certainly have seen all the major markets that have shown already strong growth, that they are just getting stronger. So it's good to hear that Fannie recognizes that shortage and that their policies are aligning to support that additional supply that needs to come online. Right?
And one of the other things that Doug mentioned was that they are shifting their policy. It looks like they're shifting their policy to where they had a certain allocation. I believe it was like 7% of the portfolio towards second home / investment property. And what they realized was that they really needed to focus more on investment property, not necessarily second homes, because that's the missing element. Somebody's second home isn't as important as the person that has no home or needs one for their own primary residence. So it's likely that they're going to shift the focus towards that 7% allocation going into investment property, which is a great thing for investors. And to your point about the all the extra money flowing, I mean, we've got an extra $9 trillion that got pumped into the economy last year. It may have gone through restaurants, it may have gone to Amazon, but ultimately it's going to end up in investors' hands. That's how it always works. Those investors are looking for real assets. A lot of it's going into the stock market, but a lot of that is going into real estate. And because of what's going on with the lack of supply, and the reality is that we have this huge demand, people are smart. They're putting it into something that's going to continue to be solid, which is residential housing.
Yeah, absolutely. Now, obviously, with that, right, with all that money that is out there, the liquidity, the inflation element is only for real. Whether the Fed is calling it transitory or not, that is a big question. I personally believe it will not be transitory in the way they think, and certainly over the last month or so, we certainly have already seen a shift by a number of members of the board where they feel, yes, I think we will probably have a headline inflation that is higher than what we originally anticipated. Right, and I think that's important, obviously, for institutional investors, and that's why real estate, real assets, are really important in an inflationary environment, and it's also important for individual investors. Right, keeping your money in a money market account, whether it's a retirement account or your non-retirement account, is likely reducing your purchase power over the next few years. It has done that already over the last decades, and it's probably accelerating even more. And I think the service that you provide, right, with eQRP is really, in my view, very important to provide the tools to investors that have retirement funds, that they actually think of investing in the right assets so that they are not falling behind with their wealth growth. So maybe you can talk a little bit about the eQRP, and obviously have written a book about it. For people who are in the real estate syndication space, I would say you have already built up quite a name. A lot of people know you, but some of our listeners do not know about it. So maybe you can explain a little bit what it is all about.
Yeah, there's in the retirement world, it's an interesting thing that there's most of the liquidity in America for individuals is in retirement accounts. So it's 401ks, IRAs. There's $35 trillion in these accounts. And most people are sitting there staring at a brokerage statement, hoping the number goes up, and that's their entire plan. And the truth is, there's a lot of options, but most people aren't told about those because the system doesn't want to tell you how to take your money out of the system because it loses all the fees. So the alternative, the best alternative out there is the eQRP, which gives people the ability to control what they want to invest in. And what that means for somebody listening or watching is that you can take your retirement account money, your old 401ks and IRAs, and get control. So it's in a checkbook. You actually get to invest it. You're not subject to fees and taxes like you would with an IRA. And if you want to invest in real estate, for example, IRAs can tax you up to 37% on that leveraged real estate. So if you're thinking about stuff like real estate or crypto or gold or these alternative, and I laugh at that, Anton, when I think about alternative, and I say, wait, what's alternative about real estate or gold? Like that seems like that's real, and the stock market is kind of the alternative. It's the fake stuff. So the reason this is really important is because taxes are the biggest expense we have, and the idea is you want to find ways to go towards zero. And why do you want to do that? Because you're smarter with your money and you're going to do better than the government. And ultimately, there's no freedom if all your money is going away in taxes. The eQRP allows you to get to a point where you're at zero tax. And one of the things we like is the current tax code meshing real estate and the Roth eQRP together, getting your money to zero tax when you make it, when you grow it, when you pull it out. So it gives you a lot of options to have the right tool. But if you don't have the right tool, you may think you have a vehicle, but that vehicle might be a 1950 Ford that's going to break down. And what we're looking for is we're looking for the Ferrari, the thing that's going to take you where you want to go quickly, on purpose and decisively. And that's what the eQRP really does. It allows you to go grow your portfolio and not think, gosh, I wonder what Joe Biden is going to do with my taxes. If you do it right, you don't care what Joe Biden does because the tax can go to zero permanently.
Yeah, it's really important, right? I think also with the eQRP, with as a real estate investors, you have these some fees or taxes are still being charged depending on the type of investment. But with real estate, you also have that freedom where you, even though it's a leveraged investment, that you don't have to pay taxes on that. Maybe you can touch on that too, right? Kind of explaining why real estate is really the ideal vehicle for these eQRP retirement funds.
Yeah, this is a conversation that I've had with people like Tom Wheelwright many times. The fairly well known accountant that works with Robert Kiyosaki and the Rich Dad organization, and he'll often say, "Don't put real estate in a retirement account." And what he's talking about is an IRA. And the reason he's saying that is because if you put leveraged real estate like a syndication, if you're an investor in an apartment syndication and you use an IRA, when that apartment sells, you're likely going to be paying 37% on most of your profits. So to give you an example, if you put $100,000 into a syndication for apartments and that 100 turned into 200, you're probably going to pay about $22,000 to $25,000 in taxes using your IRA, even if it was a Roth IRA. So people don't realize this is going to happen. And it's because of UBIT tax, the unrelated business income tax. Totally an option. And when I say an option, I mean, if you don't want to pay it, you can avoid paying it. And the way you do that is you have the correct account, which is called the eQRP. We can move assets that are already invested in an IRA, self-directed IRA, into an eQRP, and you can start fresh with an eQRP. It's exempt from the tax. And so it's really funny because people say, well, why is that? Well, sometimes you just have to say it is what it is. But the reality is the tax code is very complex, and the 401 section of the code exempted leveraged real estate for people to use their 401ks, eQRPs to invest. The IRAs don't have the exemption. So whether you're investing directly or whether you're going to put a syndication together and you're going to have investors, it doesn't make sense to have an IRA investing in real estate syndications. The only time you'd really want to have real estate outside of a retirement account is if you were going to buy a property and hold it for the next 50 years. That can be really smart. But if you're going to buy a property or invest in something that you're going to sell in 3 to 5 years, the Roth eQRP is the ultimate best way to hold that property. There's no exception and there's no alternative to it.
Yeah, very good point, right? Again, no one really knows why one is exempt and the other one is not, but it doesn't really matter. What matters is that the option is there, right? And unfortunately, we have seen, right, we see so many deals, and we talked also to a lot of passive investors, and a lot of them were surprised when they got hit by that UBIT with a pretty big check, right, that they had to write. And actually, they were shocked. Well, it's retirement money that is invested here. Why on earth do I have to pay taxes? So it's really strange that no one has been advising them, right? So someone has taken the money, allows them to do that so-called self-directed IRA, but no one was telling them, look, you need to watch in what you invest in to avoid some of these taxes, right?
Well, and one of the things that's really disappointing is that we've run into a lot of IRA custodians that say, we're not responsible for telling you. And it's true, they're not responsible. So they don't really advise or coach or mentor. They say, yeah, maybe it'll happen. Or I've seen some really unfortunate marketing that says, oh, don't worry about it. I think everybody should be worrying about it. If you're investing using retirement money, you don't want to lose a quarter of your return because somebody doesn't want to tell you the truth. And the truth is there are really great options, and then there are options that are going to require you to write really big unnecessary checks.
Yeah, that's absolutely right. And don't worry about it. You may have a CPA who doesn't really know about the UBIT rules, and they do not pointed out, but then you suddenly have a look back by the IRS when you get hit even more, right? So it's really important to understand what your liability is, regardless of whether someone tells you it's not a big deal or not, right? So it's only very, I think this is a key piece that our listeners really need to understand. If you have money in IRA and you are thinking about investing in the syndication, and I know a lot of people, I just had a discussion last night with a couple that has a lot of money in IRA, and I told them, look, you will get hit by that UBIT if you need to make changes before you invest in syndications. They didn't know about it, right? The CPA didn't tell them. So it appears to me there is still a shortage of knowledge as well as education out there to tell these individuals what they need to watch out for when they have a self-directed IRA. Right?
It's a key piece that unfortunately a lot of CPAs aren't aware of. The tax code is complex. It's thousands and thousands of pages. And this is where sometimes it's important to think about adding new people or maybe replacing some people on the team, because most accountants are overworked and they're trying to keep up, but it's hard to keep up with everything. And you focus on your main thing. Most of people's retirement stuff fits into a little box, and the stuff that we do with the eQRP and the IRA stuff that's out there is not something most accountants have any knowledge about because it's too specialized. And so if they don't focus on that, they're not really going to know. And by the time they do figure it out, it's too late and the check has to be written. So, we've been to some conferences like the real estate guys and some great teachers in Texas, and they always have people that know this stuff. So it's really important to listen to the podcasts and be at these live events where people that are really thinking and studying can get together, because that's where you're going to learn about this. Most people aren't going to learn from their legacy teams.
Yeah, absolutely. It's a very good point. So have you seen any changes to the tax code, to the rules, how you can fund and when you can fund, since obviously with COVID-19, all the deadlines have gone out the window, it appears. Have you seen when it comes to eQRP funding, have you also seen some changes, and are they permanent, or do you see it will go back to where it was previously?
Yeah, there actually have been some pretty big changes that just happened in the last year. Congress changed the rules. So a couple of them, one of them is that's really great. If you can set up a retirement account specifically in eQRP for the previous year. So here we are in 2021. If you say, oh, I made too much money in 2020, if you haven't filed your taxes yet, you can set up an eQRP for the previous year and then fund it for the previous year, reducing your income, maybe even qualifying for the QBI, which is the qualified business income deduction, which is another 20% off. So there's some really great things. It's called retroactive tax planning, which is very unusual. Usually if you don't do it beforehand, it's too late. And in this case, you can actually do that. So that's a really big plus. One of the big things that changed as well, because the government is trying to figure out how to get everybody involved, they changed the rules about the old solo 401ks, where if you have a solo 401k and you have even a part-time employee, you can't have the solo 401k anymore. So what does that mean for somebody? It means that you're really stuck if you ever want to expand. Well, the eQRP is set up for people that have employees, up to 50 employees, where everybody gets control. And it's the only one of its kind. There is no other option where you actually have control for everybody, including those part-time and full-time. So if you're thinking, well, I don't have an employee, well, maybe you might need some help as you grow your business or your investment portfolio. You want to make sure you're setting yourself up correctly so you don't blow up your retirement account simply because you want to expand and grow. And I think that that's really important for people to realize that those rules changed. And most of the websites that are out there actually don't talk about this. People are still acting as if nothing has changed. But that's one of the things about working with people that are keeping up with the new rules and new laws. And we also see some changes coming to equalize the environment, meaning the tax benefits tend to be the best for the wealthiest, because if they get a tax break and their income is taxed at the highest rates, that's really good for them. But if somebody in the lower income arena gets a tax break, it's not as beneficial. So we see things happening like tax credits for retirement accounts, contributions. We see some of that stuff. We don't see any major overhaul, but one thing I do anticipate this decade is that the Roth account will get whacked, destroyed, taken out of play, because it's very expensive for the government. And what I see likely happening there is that anybody that has a Roth account would be grandfathered in and their money would be in place. And why is that? Because if you look at Congress, you look at people like Mitt Romney, who have $100 million in his retirement account. I don't think they're going to go vote against their own best interest. So just
Probably
keep that in
not.
mind. No, probably not.
Yeah, it's a good point. But you think that it's going to go away?
I think it'll be stopped. It's so similar to when the IRA's rules changed, where if you inherited an IRA, it used to be that the person that inherited it could keep the money growing and spend it over their entire lifetime. It's called a stretch IRA. Congress said, no, we don't want families being able to keep their wealth. We want to have that money back into circulation to be
Sure.
taxed. So they said, we're going to limit it. This happened 2 years ago. We're going to limit it so you only have 10 years. And that made it really challenging for a lot of people that relied on that. But if you already inherited an IRA, then you still had your whole lifetime. So that's
Yeah.
what they tend to do. They change the rules, but if you're already in something, they say, okay, well, you're already in, but nobody else can come in. I think that's coming with the Roth here in the next 10 years.
Okay, very good to know. You mentioned the retroactive contribution into a eQRP. So if someone hasn't filed yet for 2020, right? So let's say the deadline is September 15th or October 15th, depending on what the situation, personal situation is. Are you saying all the way to that filing, someone could choose to still establish an eQRP and put funds into that for 2020?
Absolutely. That's exactly what I'm saying, all the way to the extension. So it could be September, it might even be October, depending on how you're structured. And so you can put money in there. And so what's interesting is a lot of people don't pay attention to that because they say, oh, that's always been the case with IRAs. But who cares?
Yeah.
It doesn't really matter if you can put $6,000 into something. It's not going to move the dial. But with an eQRP, you can put 58,000 or more. And if there's a couple in a family, it could be $120,000, $130,000. With kids, it could be 200,000. So it's a really big opportunity for people to look at what their income was in 2020 and all the way into the fall of 2021, being able to reduce that income backwards. So it's a pretty big deal. A lot of money at play here. Saves a lot of people. On average, we see people saving about $20,000 in taxes by doing this.
No, sure. That's a very big deal, right? I think that obviously for some, it might be a concern. Okay, now I have that money in that eQRP. Now it's locked up and I do not really have flexibility to work with that money. What would you say to them?
I would say that the eQRP is a shelter where it protects and grows your money, and you can do it without any taxes at all. And then when you pull it out, there are ways to get it out at any age, Anton, not just 59 and a half, at any age, and do it tax free. No penalties, no taxes. This is part of the strategy. This is why you have tax strategists, not just CPAs. I mean, if you have a CPA, you really want that CPA to be a strategist. So it's not just being able to get it out, but you can invest it in all these real assets, things like real estate and physical gold and private notes and private companies and crypto, Bitcoin, all these things. So you have all the control. You're not stuck in anything. You can pull it out at any point. I know that there are some people out there that say, I don't think we should do real estate, or we shouldn't do a retirement account because we're stuck until we're 60. And that's just not knowing how these work, because there's ways to pull it out at any age, no penalty, no tax. You just have to have the right information and use the code instead of being ignorant or listening to whatever Google tells you.
Yeah. So can you touch on some of the options that one would have to pull some money out without a tax consequence, or at least reduced consequence?
Yeah. So, I mean, there's ways to use the Roth account, and there's ways to use real estate, because when you're, and being a real estate professional, or having a spouse being a real estate professional, and converting money. And so it's a fairly complex strategy to bring all these pieces together. But what we're talking about is things you can understand if each piece is understandable. Taking money and making it Roth. Well, if it's Roth, there's no tax. And if you're a real estate professional, you can use cost segregation to reduce to reduce the income, and the income is produced when you convert money from pre-tax to Roth. So you put all these pieces together and you realize, wait a second, I could actually pull out $1 million at age 45, no tax, no penalty.
You
and
just
nobody
need to
talks
think
about
what you do with it, right? So
Yeah, I mean, it's the truth is we have a lot more options than we think we do, and it's about having the right team. So one of the things I like about you is you understand that. So you're always encouraging people to have the right team members and not try to do everything on their own. I mean, that's what any smart investor does. They encourage teams and they have teams.
Yeah, absolutely. Right. So it's absolutely crucial, right? If you don't have that, and if you rely on your financial advisor or your CPA that is just doing the regular tax returns, they just do not know about it, right? So it's not that you could argue, well, they should know about it. The reality is, if you're in a specialist in a certain segment, you are good at that, but you're not good in others, right? And that's where building the right team is so important, right? So, Damion, that was really great. I think you added tons of value here to our listeners. I really encourage anyone who has an IRA and has been thinking about self-directed investments. Right. Obviously, we all know that very often you can invest in equities, you can invest in mutual funds and bonds and all that, and there is a place for that. But I think in terms of diversification, considering that usually a big chunk of someone's net worth is in retirement accounts, I think it's important to do yourself a favor and talk to professionals that really know the benefits of alternatives. And obviously, when it comes to real estate investments with retirement funds, the eQRP solution is the right solution out there, so you don't get hit by that UBIT tax. So please do yourself personally a favor and reach out to someone like Damion, who has been doing this and studying it for a very long time, and read his books, right? So he did a book, and so now you can now promote your book, as well as obviously hopefully also have your contact details that you can share, because that is as for someone to starting out, I think reading that book is a good start, but then it's still important that someone is actually talking to you in person to really grasp the true issues, and that they can implement the solution properly.
Yeah, and the first step is really doing something. It's taking a step. So I think what I'd love to have people do is get a copy of the summary of the book, which is it's like the Cliff Notes. It's about 15 pages. It's the report on the eQRP, and you can get that by texting the word eQRP to 72,000. So when you do that, you're going to get a copy. It's a digital copy of the report, and then we'll send you a copy of the physical book, and we'll FedEx it out to you. So all you really have to do right now, simple, just text the word eQRP to 72,000, and that will give you what you need to start and learn. And even if you can't use it, I guarantee you there's somebody you know that this will change their life. And so it gives you the opportunity to be a bit of a superhero and help somebody you care about stop losing all their money to taxes and fees and penalties that they really aren't necessary.
Yeah, absolutely. So thanks again, Damion, for coming on with me today. You added plenty of value, and I hope that you created a wake-up call for a number of listeners that there is a solution to the retirement funds, and that all what they have to do is taking action.
That's awesome. I appreciate you having me. Thanks so much for the opportunity.
Yeah, thanks, Damion.